Hey there, welcome again to my blog, my vlog, whatever you call this kind of thing. I want to talk about three main awesome ways that you can invest in real estate with little to no money. Okay, I know it sounds almost like it's too good to be true, but there really are ways that you can invest in real estate or buy real estate without having much, if any, money at all. Okay, and I'll just dive right in. So the first way is to partner up. All right. And what I mean by partner up is to work together with a colleague, a friend, a family member, and or an associate who has the cash that you need to get a deal done. Okay, so your partner in this investment venture could be either providing some or all of the cash that you need to purchase the property outright, or if you're going to need a mortgage, they can be your co-borrower and they would be providing the down payment and closing costs. All right, it's effective because you're basically able to maximize your return, right? When you're not putting as much down. And ideally, you bring the knowledge and the ability to do market analysis, and maybe you have the availability that your partner does not have in terms of time to manage the property. And again, hopefully, it's a symbiotic relationship. And I can't emphasize enough, though, to only work with people that you trust when you do things like this. Somebody that you trust and also has goals that align with yours. So, how do you find partners, right? So the first option that comes to mind for me is family, because I'm very close with my family, friends, people that you work with and trust. Those are the best people that you might want to go for, and they might also know somebody else that you can, work with also. Another option would be to ask real estate brokers or real estate agents. They work with all the buyers and all the sellers and all the investors. So they might know people that they can refer you to. Some of them might actually be game to work alongside you too as a partner. You never know. The sky's the limit. Another option that you can look into are investment clubs. So there should be some kind of an investment club near you, okay? Unless you live like way out there, you should be able to find something. A quick Google might help. Obviously, you can find your local REIA or your local investment seminars that you can find on Eventbrite. I kind of go through all of this in my blog. The link is below. You can meet people on meetup.com. And the key here, I think, is to just get face to face with people. You want to meet them, get to know them, have them get to know you, and build that trust, right? Because there are techniques about partnering up with people or having somebody else put the money in for you, but I think it's not just about you trusting them. I had mentioned that before. You need to trust them well. They need to trust you also, right? Another avenue you can go to connect with people and try to network and find a partner is through social media. I kind of highly recommend looking into this anyway if you're looking to get into real estate, because you can meet some people who have knowledge that you don't have that can share some advice. You can ask some questions. So on Facebook, there are groups that you can join, and you can kind of get to know the other members in those groups. And another platform that I suggest kind of looking into, although it's not my favorite at all, is LinkedIn. So LinkedIn is a place where you can kind of connect with people on a professional level, other folks that might have a little bit more knowledge in real estate, maybe people you do know, but haven't really gotten to break the ice with them on a professional scale. You can try to connect with them on LinkedIn as well. Any social media platform really is good for connecting with people, I think, but Facebook and LinkedIn are probably the two that you'd want to hone in on the most for this kind of thing. All right, so it's option two, lease option, or another term for this is lease to own. And basically how this works is you lease a property, and there's the option to buy it later, and this is all kind of hashed out in the agreement. It typically includes obviously the terms, the lease terms, and it would define how long you occupy the property and when you would need to basically make that decision about whether you're purchasing it or not. You most likely will have like a non-refundable fee up front to secure, and this is a good option for you if, say, you don't have the capital or money to make a huge hefty down payment, but you need to rent a place anyway and you have the money to do that, right? And you have a little bit of extra funds to pay a little extra along the way. So this is super effective because you're basically acquiring this property, like I said, without having to have all the money together to buy it outright, and you have the opportunity to complete the purchase at a future date at today's price, because you're locking in a price. And the trend in my region has been upward, right? So if you're in a market where appreciation is most likely going to happen, then this is great, because you're locking in at a price today on a property that's going to be building equity, and you're getting it. So that's a great option. I do want to also point out, tail ending off of that very point, that you have to be cautious, because if there's a declining trend in that market, chances are that you're locking in at a price that is higher than what it's gonna than the house is going to be worth when you complete the whole transaction. So these are things that you definitely want to talk to a professional real estate agent about if you go this route, or talk to a financial advisor or a trusted professional in your life. Definitely look for advice if you need it. And again, great option for people who are, in a position where they're renting anyway and have a little bit of extra money that they can pay, along the way. Private financing is the third way. And how this works basically is you're going directly to friends, family, basically a non-traditional lender. Okay, so this could be friends and family. It's most likely going to be another entity, right? An example of this would be like a hard money loan, and those you can get up to 100% of the purchase price, right? Including cost to repair or rehab. Okay. I say that though with um, the warning, right, that this will typically only be doable if you can get the total cost to be less than like 70% of the after repair loan to value. Okay, so I think the abbreviation is AR LTV. So if you can get that number to work, you could probably get 100% uh, loan for the transaction. And you can negotiate loan terms so that the cost of buying the investment property are covered with little to no money of your own. It's a great option for fix and flips, and as the returns are relatively quickly to turn around, then you're in a better position. Another option here, which falls under the same kind of realm as a private loan, is seller financing or owner financing. And how this works is you go directly to the seller. They would be acting as the bank, offering you the loan themselves rather than going through a traditional lender. And you repay the loan based on the terms that you laid out in your agreement. Okay, and it's super effective. I've seen people do this successfully time and time again. It can basically speed up the buying process and can cost a lot less than the traditional methods of buying. So I do also want to point out that you want to make sure that the seller is actually in a position where they can successfully offer financing. And you also want to note that these loans are typically, they're not your 30-year fixed loan. Okay, it's like a five or so year term typically. And you want to also make sure that your credit card worthiness stays intact or improves along the way, um, because typically if you go this route, the plan is to eventually refinance and pay the rest of this through a traditional lender. Okay, so as always, pay keen attention to the value trends where you're buying, because you're literally banking on accumulating equity in the property. This approach works especially well if the seller owns the property outright. And for instance, my parents once bought a house where someone inherited the property, right, and wanted to sell it quickly. And it made sense for everybody involved to go this route. Okay. For the seller, it's kind of a win-win, because they move the property fast without the headache of, going on the market and paying a real estate agent and all that stuff. In my parents' example, they acquired another investment property with literally little to nothing spent upfront. So I have way more details about other, ways that you can do this. This is all laid out in my blog. I do want to touch on really quick that there are also options for you to begin generating income without purchasing at all. And that is mainly for people who may not feel financially secure enough or ready yet to buy real estate. Okay. Maybe you want to just kind of dip a toe in to the real estate investment world. One way that you could do this is rent hacking, and that is when you rent like a multi-bedroom apartment or a multi-bedroom home, and you would sublease to tenants. Okay, ideally, if you're somebody who's trying to build, you probably live in one of those units, and you're doing this to generate a little bit of a profit along the way. And it's a great option. So you can offset your living expenses and, like I said, generate income and collect from the tenants in the property. So this can help you. It's not the fastest way to make money, but it is a way to kind of get your feet wet in the whole investment world and also make a little bit money while you learn. Tail ending off of that, similar concept is Airbnb arbitrage. I talk about this in my blogs over and over. And how this works is basically you sublease an income generating property, right? And you rent the property from the landlord. You obviously have to get permission to sublet it, and then you rent it out on short term rental platforms like Vrbo or Airbnb for profit. Again, I explain this in full detail in my blog. It's effective because obviously you don't need to own property. You're just paying rent, and then you're earning the difference between the rent and what you charge guests to stay at the property. Okay. There's also various strategies for how to invest in real estate when you own your primary residence. I go through these details as well in my blog. There's house hacking, there's leveraging your equity through HELOCs and cash out refi. So please do check out my blog for more details about all of this. And also, I highly encourage you to connect with me. Again, you can click on that Get Started button on my blog. Let me know what your goals are, and we'll see how we can connect you with the right resources to get there. Thanks again.